At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, August 25, 2023, why is Affirm stock up 30% today? Affirm's positive outlook is clashing with reality. Shares of consumer lending fintech specialist Affirm are jumping 30% higher on Friday. Sentiment is spiking on an earnings beat and optimistic guidance for the current quarter. Despite Affirm stock skyrocketing, analysts remain largely skeptical. Representing a surprise winner on Friday, shares of consumer lending fintech specialist Affirm, Nasdaq AFRM, which provides a buy now, pay later platform, are jumping around 30% today. Undergirding sentiment this afternoon is a solid earnings print and optimistic guidance from the company. Still, analysts remain skeptical about Affirm stock. According to a CNBC report, Affirm posted a loss per share of 69 cents for its fiscal fourth quarter. That beat the Wall Street consensus, which sat at a loss of 85 cents, per Refinitiv data. On the top line, the company also rang up $446 million in sales, handily beating analysts' expectation for $406 million. However, what's really bolstering sentiment for Affirm stock is management's strong guidance for fiscal first quarter. The company projected a revenue range of between $430 million to $455 million for the period. In contrast, the Street anticipates first quarter sales of $430 million. Notably, Affirm reported gross merchandise volume of $5.5 billion during the quarter as well. That marks a 25% increase year over year. Analysts had targeted GMV to hit $5.3 billion. Overall, Affirm stock appears to be climbing a wall of worry. Still, many market observers remain unconvinced. Affirm stock rises despite legitimate skepticism. As the New York Times recently noted, retailers have reported signs that U.S. consumers are feeling stressed. A pensive cloud has taken over, argues journalist Jordan Holman, as American savings erode, inflation continues to bite and other factors tighten their wallets, namely, the resumption of student loan payments in October. However, the rise of Affirm stock appears to dismiss such concerns. Despite significant changes in interest rates and consumer demand, we still delivered good credit results, unit economics, and GMV growth, stated Affirm Chief Financial Officer Michael Linford. We also demonstrated that the business can continue to expand profitably even in a high interest rate environment. As for the resumption of student loan payments, management acknowledged that it will be a modest headwind to its fiscal 2024 GMV. Still, while many analysts are cheering Affirm's robust print, others are questioning the optimistic tone. As many news outlets reported, credit card balances jumped by $45 billion between calendar first quarter and second quarter of this year. Overall, the total plastic debt has exceeded the $1 trillion level. There appears to be potential downside to numbers in the form of losses and higher provision should the impact of payment resumptions on consumer credit be slightly more than modest, writes BTIG analyst Lance Jessurun. Why it matters? At the time of this writing, TipRanks points out that Affirm stock carries an analyst consensus view of hold. This assessment breaks down as 3 buys, 7 holds and 4 sell ratings. Overall, the average price target for Affirm sits at $15.71 per share, implying around 13% downside risk. Thanks for watching.